Howdy, Jacob here. Today we're looking at Forrester Research, ticker symbol FORR, in the professional services industry. They operate as an independent research and advisory company internationally and in the US, headquartered in Cambridge, incorporated in 1983. Their revenue growth is pretty small. You're probably looking at pretty close to that 3% year over year revenue growth from 10 years ago. We are seeing 2 years of double digit revenue declines, though, which is not very positive, and we are seeing a drop off of both gross and operating margin. So it looks like cost of goods sold, some of those expenses, they are kind of fixed. They're not able to reduce, but revenue being reduced is definitely affecting that bottom line. So much so that their dividend has actually been removed in 2018, even before COVID, and return on invested capital pretty down since then. So maybe they made an acquisition in 2019 that kind of changed their capital structure a little bit. Obviously hit the top line, but definitely not the bottom line. Let's see if that's the case from a quick glance. 2019, bam, acquisition, didn't increase free cash flow. Absolutely not what I want to see in acquisition. I know it's going to take some time to uh, synergy to occur where you're just removing some of that excess expenses, but it's been 5 years, over 5 years. So that should have been figured out by now, and we're not seeing it hit the bottom line. So not so positive things that I'm seeing so far. Balance sheet, 105 million cash on hand, zero short-term debt, zero long-term debt. If that's the case, that is definitely impressive. Even last year, 73 million with no short-term debt, 35 million long-term debt. The balance sheet is definitely something that I'm attracted to, but this decline in revenue, this dampening of free cash flow to even negative territory is not something that I'm crazy attracted to. So this is going to be something that I'm ready to make assumptions on, but I have a feeling I'm not. Maybe I'll be a little picky here. So for revenue growth, 2 years of decline, will that continue? I mean, even before they weren't really growing much, so maybe 1%. Still think I'm going to grow below market average, even though they have net cash. I don't trust them to necessarily do what's best for the business. Maybe they will, and I'm being kind of a rude individual, but obviously wanted to say something else, whatever. But anyways, for margins here, I like to go into here, see where these margins are at. So 4, 5, 4, 5, 4. Free cash flow used to be so high, and then they made an acquisition, and now it's dampened. So I feel like I'm going to go 4 and 5 with share change of they're buying back shares, but they're also stock-based compensation is pretty much as they're buying back, so flat. And we're saying it needs to fall 61%. So again, I mean, pretty good looking from a balance sheet perspective, but actual business performance, not looking so attractive. So this would be definitely something interesting. If this is your type of industry and you understand this business really well, I would definitely want to figure out what they're going to do with that net cash that they have, because they do have a lot of cash on hand in comparison to their market cap. We're looking at $100 million in relation to their 237 market cap with no debt. If they can do something, pretty impressive with that cash to get a great return, then this could be a great buy here. But for me, based on what I'm seeing and my knowledge at this point, definitely needing to fall a bit more. Hope you enjoy this video. Have a great day.